market edition, and I'm going to do some analysis of the U.S. equity market futures for us today. This will be my kind of a weekly update as to what's going on in the markets. And I'm going to start off here looking at the Russell 2000. I'm on a continuous contract because I'm on a monthly chart. And looking at this monthly chart, we had something kind of interesting happen. This is a close that happened last week below the 13-month simple moving average, which I've never really applied it to the Russell before, but in the past, it can typically signify a major turn to the downside is likely to happen. So you see that we've had a couple of instances in the past here in the Russell where we ended up moving lower, and every time we closed below, we ended up moving lower. Well, there was a slight close above, never really established any bullishness, but we ended up popping back below. So really, this is the third time in the history of this index. We can take a look at the ES as well and see that, well, according to this, that we're not really threatening any kind of bearish motion in the ES yet, but the Russell's been the leading index to the downside, so that's why I'm worried a little bit it might drag things down. We take a look at the NASDAQ, also continuous chart, and not quite as bearish. The Russell's definitely the weakest. Let's take a look at the Dow since we're there as well. And again, the Dow also still above that monthly moving average. But if we start to see those major indexes pull back down, the Dow would probably be the first one to reach it. But just keep an eye out for the others as well. I'm going to go back to the Russell. And we'll get rid of that moving average for right now. I'm not going to see it anyway of less data. But we can start taking a look at price action here. We'll go down to the weekly chart. And the weekly chart's not really showing us anything. We're down at the bottom of the overall range we've been in. So nothing going on there. On the daily perspective, though, we are showing a lot of weakness. We can't get above 60 on the RSI as we rallied, so that's pretty bearish. Typically, once you get above 60, you go back into a bullish trend, and that's just not happening. We have kind of drop supply overhead on the weekly, maybe even formed a new zone right here, again, on the weekly chart. But really, the main thing I'm looking at on this time frame, I'm going to remove these because I don't really need them. The main thing I'm looking at here on the daily chart is the fact that we've made highs and could not get above 60 on the RSI. That's bearish. And the fact we did go below 40 is also very bearish on the last pullback. This week, as we open up, and actually on Sunday going into Monday, we're close to 40. If we end up going below 40, then most likely we will take out previous lows. That's usually what happens. Typically, when you see a move that begins with the RSI above 60, your next move down does not take out prior lows. You can see we failed to break a prior low right here. Instead, we paused and then started a new move down. That move down, though, started with the RSI below 60, my bad. And there we were able to breach prior lows. Again, we make a high in price, and if the RSI fails to get above 60, you guessed it, the next move down takes out a prior low. And finally, we see that the fact that 2022 so far did not get us above 60 on the daily chart, that means, or suggesting that this current move to the downside should take us below these previous lows that we experienced back here about 21.02. So let me go and clean this up again and just put this as one of our targets that we should be able to breach to a prior low. Let's take a look back to see, are there any demand zones that we might, well, we'd have to look at a continuous contract. Let's do that. And it's not going to be the most accurate because you're not looking at the actual security you're trading. You're looking at the adjusted security. But by looking back here, that's what happened there. Wrong button. All right, so now we pull back a little bit. And we can see our nearest daily demand that's going to be likely our target here for this downward move is 1988. So just under 2,000 is what we should be expecting on the current week coming up. Lots of bearishness here in the Russell and small caps. So moving in a smaller time frame, I'll go down to a 240. And let's refresh to get a better view. You can see that we've got lower highs and lower lows going on right now. We are going to come up towards a small stepping stone or speed bump, if you will, right here at 2158.3. And even the low of the most recent move, 2134, those are demand zones that could slow down price a little bit. What's good for the bulls is we're not going to go straight down. We're going to bounce a little, and we're seeing right now a possible divergence. So as we approach that 4-hour demand, it may even happen as we open. on Sunday going into Monday, what we've had is what's called a positive divergence. Let me change this to make it easier. And what I mean by that is price is making fresh lows, but the indicator is not. So we've lost our bearish momentum that usually leads to a bit of a pullback, a bounce. Well, if we do bounce, there's plenty of new opportunities to get short, to get down to that daily demand zone that I was talking about in 1988. So the first one is going to be 2256.5 to 2276.4. So we're likely to bounce at one of these two demand zones, bounce up to the 2256 before the downward trend continues us to move lower. Dropping to the 60-minute time frame, same thing. You're seeing that we've lost our bearish momentum. It's still there. It's just not as strong. Okay, so we haven't lost it completely, but you can see the higher lows indicates less bearishness as prices are trying to make new lows. So all that's suggesting, again, is just a bounce in price. Not really seeing too much different here on the hourly time frame as far as any price targets or getting short entries. I mean, it's not really any good zones there, to be honest with you. And as far as the bouncing points for demand, it's pretty much the same, I believe. Get rid of that daily area. Yep. We might have kind of a two little zones right in here, top of each other. But overall, I'm expecting, like I said, towards the beginning of the week, maybe on Sunday going into Monday morning, or maybe Monday morning, possible bounce off the 2165.4 before we eventually turn down and end the week much, much lower. So look for that. I'll go over to the S&P. And we'll again start off on the big picture, start off on the weekly, as a matter of fact, if we want to. And this is losing its momentum. We're still bullish on the weekly chart, but you can see lower highs on the indicator, which is lack of momentum while we're trying to move higher in price, suggesting a pullback happening pretty soon. Going into the daily chart, this one we did eventually go above 60 on the high, so it's a lot more bullish than we were on the Russell. However, this is a negative divergence that led to the sell-off that occurred towards the end of the week. You see Wednesday, Thursday, Friday, we just sold off like mad. The indicator told us that was going to happen. The big key thing will be whether or not we're not going to make a new low. Let's put it that way. This week, we're going to be unlikely to make a new low of 45.20. Like the Russell was very weak, this is not as weak. And the reason why is the move down originated with the RSI being above 60. So definitely not nearly as bearish as the Russell is. Small caps are much weaker than the large caps. But that doesn't mean that we're out of the woods yet. What I'll watch for is if on the daily chart we get below 40 at any point. If we don't, then we might be able to make new highs by the end of the week or maybe even beginning of next week. Going into a smaller time frame, the 4-hour, we do have overhead supply that's probably going to hold us down. So right here, you can see we're kind of weak trying to move down, but divergence, once again, it's a pretty powerful signal when you see it. It can be. Here, prices are trying to make new lows, but the momentum is not. We're getting the similar or higher lows on the indicator. That's suggesting this bearishness is wearing thin and likely to bounce a little bit. I'm not saying it's a trend change because I don't see it yet. I think we're more likely to go a little sideways, not making a new high or new low in the ES for this week. But there still could be some short-term trading opportunities within the range. So keep an eye out for that daily and also that 4-hour, the 4-hour supply, 47.6650. Let's take a look to see if there's any kind of a demand down below that might cause a bounce. And we're close to one right now, it appears. So looking back here, we can see rally, base, and rally out. So we're almost at a bouncing point. If that one doesn't work, we got another one here. There's likely to be a little bit of a ping pong this week, just bouncing back and forth, kind of overall moving nowhere, but in the meantime, giving short-term trading opportunities to play. I don't see a strong trend. I mean, it is somewhat bearish right now on the 4-hour, but again, we're more likely to do a couple bounces, maybe bounce at the 46.44 up to the 47.66, then back down to the 46.01. The key thing would be as we bounce up to 47.66 on the daily chart, we would need to be above 60. If we are not above 60 when we reach up to 47.66 on the daily time frame, then we will actually take out this low by the end of the week. So I think that's about all I've got here on the hourly chart. The only thing we can do maybe is fine tune the entry just a bit. Not really though. Probably stick with that 4-hour zone. I'm not really seeing anything else on the smaller time frame that looks any better. And same thing for the demand, I believe. Let's take a look. Just this demand gets fine-tuned a little bit. The one basing candle, this one doesn't even qualify anymore. So it is there on the 4-hour, which is more important on the higher time frame. But that's about all I got for us on the ES. So we'll jump up to the weekly chart and go to the NASDAQ. Oops. NQH 2022. There we go. And let me go ahead and clean up the chart here. There we go. You can see that we were very choppy on the weekly chart. We did make a lower high, have not made a lower low yet. If we make a lower low on the weekly, that's a bearish trend. So be careful. Watch the low. If we break 15,492 this week, that will officially put us into a bearish trend on the NASDAQ because, again, you got lower high. All you need to do is follow that up with a lower low. And that's the definition of a bearish trend, basically. So that's what I'll be looking for here to signal if we're going to continue to get weakness in the market. We're basically sitting at an area of demand here on the weekly chart as well. We've got this drop-based rally, although we didn't really move up much compared to the size of the zone, but it is kind of a zone there. Doesn't look like we're ready to turn bearish yet, or at least not make new lows below this. If we do break down, we should stall out probably around 14,800. So I'll go down to the daily chart from the weekly. And again, seeing a bearish picture. The highs and lows are a little different than what we saw before, but they are still bearish. We've got lower highs and lower lows as of last week right there, pushing us down into January. And there, you notice what happened. We made a high right here that was not above 60 on the RSI, and that was followed up with the fresh lows, and we're now below 40. So overall, very bearish here on the NASDAQ. I want to stay that way. If I'm looking to trade, I don't want to go against the trend. This is not a good demand zone. This one is down below. So on the daily chart, we are likely to continue to progress down. I said around 14,800, and that's what I'm seeing right now. And of course, on the weekly, that would put us into a weak bearish trend as well. I'll just give you the zone once again, 14,784. So on to the 4-hour time frame, or down to, I should say. Go ahead and refresh this a little. We do have another zone a little bit closer. I'll keep watch for. Drop base drop out of the 16,145, 16,324. That's about all I've got. This was already a retested zone, I believe. Yeah. And then underneath the 15,492, there's a little something right here that might hold us up a bit. Make sure I draw that correctly. There we go. 15,389, and then again we're down to that daily time frame at the 14,784. So as of right now, we do have a positive divergence as we're approaching this demand. So on Sunday night, maybe Monday morning, depends on when it happens, we're going to get a bounce. Okay, we got a positive divergence again that we finished the week off with. So that indicates that the bearish pressure is going to take a break. We should get a pop back up. And I'm looking to short. Like I said, 16,145 and a quarter, 16,324. That's a great opportunity to get in for the short. First target at 389. Second target is that daily demand at 784, 14,784. So that's what I'm seeing so far on the NASDAQ. I could drop down to 60-minute just to get into, it's not really much different. Maybe we stall out a little sooner, but I think that the 4-hour zone is probably the best. But there is a just above 16,000 another area right there too. Back to the weekly and to the last index, the Dow. I don't know why I keep typing 2020. I'm going to forget about that year. Anyway, 2022. On the weekly here, we did have new highs being made in price, which is kind of interesting because the momentum's not confirming that. You can see the momentum is very, very weak in comparison to where it should be. So again, probably pullback expected. Going down to the daily time frame, not a trend at all. We're still in an uptrend. Sorry, I should say not a downtrend. It was, but we still are in an uptrend in price on the Dow here. So holding up much better than the other indexes, but probably being dragged down by everything else. So let's see. Not really seeing anything alarming here or jumping out. We do have drop base rally as our demand that's already been tested. So if we do drop on the daily time frame, because that's been tested, we'll likely go just underneath that to the untested portion, which is 34,547. But if anything you want to buy, this would be the index. It seems to be the one that's strongest out of all the others. So going down to the 4 hour to fine tune and see what's going on in price here. Well, we're coming down. Let's see, do we have a demand here? At a high of 853 with a close 855. Nope, that's above. So this is our zone right there. Oh, actually, wait. Rally, base. That works. Just want to make sure it's all correct. There's our zone. So we do have 35,874 for a possible bouncing opportunity. Notice we're fighting and staying above 40 on the RSI. So this is a much more bullish index than the others, obviously, because it wants to stay up and doesn't want to go into bearish territory. So I'm probably going to leave this alone, except for on the long side. If you're looking to take some longs as the NASDAQ and Dow and the Russell and the S&P hit demand, the Dow has been the strongest index and probably the best long opportunity out of the four. So you want to go long the strong and short the weak. So go long in the Dow when the other indexes start turning around. It's basically playing follow the leader. You look to see which is leading in which direction, and you trade whichever one is that leader in that direction. Now, as an example, I mentioned this before, but I talk about it in my E-mini think tank classes a lot too. But you can see I'm on a daily chart right here. If we go back to, let's say it was the 20th, we started rallying. Yep, there it is. On the daily chart, on the 20th, we had leadership from the Russell and the NASDAQ to the upside. And when they gave up, well, the leader didn't fall. That would have been the Dow. It actually continued to climb for a little bit. But then January 4th, everything started turning down. You see the leading index that was to the upside. The Russell made a lower high and started making lower lows. So now that we're moving down, that leader down is both the NASDAQ and the Russell, as I was mentioning. The Dow is holding up strong. That should be the first and the strongest one to the upside if these two decide to bounce. So that's what you do, is you use the leadership to let you know which one to trade in the opposite direction. So getting back over to the Dow, I'd be looking for a long opportunity, 35,874. There's no overhead supply here. So if we rally, it depends on where we start our move. And we have impulse correction. We could pull back all the way to the 874 area. Then we would have some overhead targets here. 284 would be our next target. And then after that, it would go all the way to 38,157 if that's the trend of the overall markets. And finally, we kind of fine-tune this on a 60-minute. Actually, before I go anywhere, I'm thinking I might even be able to look at this a little bit closer here. Impulse. Yeah, no, I like the original one. The overall move to the upside, because I think that's what it was on the daily. Let me check. Really, yeah, it is. It's the daily impulse up with correction down. Now you got the targets there. So long at 35,874 with a stop below 759, targeting 37,284 is pretty much what you're looking at. So I said finally on the 60-minute, let's just see if anything changes here before we are finished for this video. And can't really adjust anything here. As far as the zones, they look about the same. And, you do have a little bit of an hourly supply, but if you're trading that 4-hour swing trade, you're not going to worry about this hourly supply. It's just going to be a little speed bump. There happen to be two there, just in case the equity markets get bearish again. Watch, because this was the leading index to the upside. So if we're going to stall and the Russell and or the NASDAQ are going to drop, it'll likely start doing it when the Dow hits that 358 or 745 area, because that's the leading index, the strongest one. And when that strong index finds weakness, again, those weak indexes are probably going to be ready to free fall. So that's pretty much what I'm seeing on these markets. If you got any questions, let me know. Love the feedback. And don't forget to hit subscribe and like, and let me know you like the videos. That way I'll be encouraged to make more for you. So until next time, trade safe, trade well, and take care.